So Mike Burry, who gets his hair cut at Supercuts and doesn't wear shoes, knows more than Alan Greenspan.
Dr. Mike Burry, yes he does.
So who is he? He's an American investor, founder of a hedge fund, Zion Asset Management, and he's actually a former physician. So when he was doing his medical housemanship, he was actually starting to do investing as well. He's actually famous for predicting and also profited from the subprime mortgage crisis during the financial crisis.
The whole housing market is propped up on these bad loans. They will fail. It's a time bomb.
What is his investing strategies? He's using the classic value investing based on Benjamin Graham's security analysis. He typically picks stocks based on margin of safety. So what is a margin of safety? So you can see there's a blue line that you see is the intrinsic value of the company, and then there's also a zone known as the buy zone. So you see the difference between the intrinsic value and also the buy zone. That is known as the margin of safety, which means that the investors will purchase stock when the share price is significantly lower than the intrinsic value. So it's known as a buffer of error. So let's look at his historical performance. He has another hedge fund known as Zion Capital, where it recorded a returns of 489.34% during 2000 to 2008, which beats the S&P 500 during the same period. And he closed down Zion Capital before he started up another hedge fund known as Zion Asset Management in 2013. It recorded a returns of nearing 300%. So right now we'll look at his top holding stock. During earlier the year, he has actually sold all of his stock portfolio, only purchased Geo Group. But today's news released that he actually bought other stocks as well. But currently, his largest holding stock is actually known as Geo Group. So he bought about 500,000 shares in Q2, and then he increased his stake in the last quarter in Q3 to 2.02 million shares. So Geo Group is actually a real estate investment trust that specializes in detention facilities, community re-entry centers, and it has about 102 facilities in North America, Australia, South Africa, and also UK. So this is what they do, where they provide rehabilitation programs to individuals and also after they have been released into the community, which is known as community re-entry. So right now we'll look at the numbers of this company. The revenue is also on an increasing trend. However, for the earnings per share, for the past 2 years, it looks like it drops quite drastically, especially in 2021. So when we look at the annual report, we found out that it was because the company was being charged a very high tax during that year, which caused them to drop in earnings. So currently, the company has a PE ratio of 18.92. But during the time when Burry purchased in Q2 and Q3, this is the range where the PE ratio was. And of course, the debt to equity ratio was actually increasing, which is something that investors should take note before they decided to buy or invest in the company.